What's going on, everyone? It is Paul, the 920 trader with 920 Trading and Trading Decoded. Today is Friday, January 26, 2024, and this is how we traded SPY today. So we're going to pre-market again, folks. We're going to pre-market. We're going to set all of our levels in pre-market. So the first thing we're looking for is pre-market high. So we got pre-market high up at about 488.63. We got pre-market low down at 485.71. That's so when I see a pre-market range like this, I mean, we're talking, close to a $3 range in pre-market. I'm thinking, you know what? We could potentially have some movement in the charts today, and we most certainly did. Now, on to our next level. So I'm looking at a 30-minute supply zone from yesterday. So this was a 30-minute double top from yesterday. So at this level right here, 488.11, if you remember back on the chart yesterday, 488.11, really, really nice double top on the 30-minute at that very level. Moving down, so we had a 15-minute triple bottom in pre-market today, right at this level. So at 488.60, and pay attention to that level because that level is going to, it's going to make some sense later in the trading day. Now this level right here, this 5-minute intraday early support. So this is a 5-minute. So we had, I think it was either double bottom, triple bottom, somewhere right around in there at this level. So 487, so 487.42, we'll pay attention to that level as well. Next level down, strong zone from the last 2 days. So remember this level again, 487.08. So 487.08, back down to a demand zone, really super, super strong demand zone at 486.55 from yesterday. So when we have a demand zone down low, we can assume that there are still buyers sitting down there. So they're still defending positions at that level. Now, we move on through our next zone down. So we're looking at 485.95. So our next level down, again, 30-minute demand zone from yesterday. So we have to get through this demand zone to get to this demand zone and then to that pre-market low. So guess what we got first thing out of the chute today? We had a cross to the upside, folks. Had a cross. Actually, very, very nice cross to the upside, folks. Wasn't prepared to take this, but at any rate, I did not take this, but we had a really, really beautiful setup. What we were looking for is that first candle breach and hold above 487.60. So 487.60. So we had multiple things going on that same candle, folks. So that first candle out of the gate at 9:30 Eastern time this morning, what was it? So we had a cross to the upside. So we had a 920 cross to the upside. We breached this level of resistance. So 487.60 back to the upside. And we had a breach of VWAP all on the same candle. Folks, that's a green light. That's a green light. Again, I didn't take this trade. A bunch of our members took this trade, but I didn't. I was not in on this trade. But anyway, I mean, it was a really, really nice run up. Now, when we were able to breach this at this level, so this 488.09, remember, that's that 30-minute supply zone from yesterday. When we were able to breach that back to the upside, I kind of thought we might be able to get that 488.63. So that pre-market high, I thought we'd be able to go up and get it. But guess what? We didn't. We reversed, came back down, back to the other side, right down to that level of support. So 488.60, made a couple of little runs back down to the downside. Again, remember this level 487.08. I did not play that. Okay, obviously didn't play this cross up because there was nothing to play. So I thought, you know what? We got down to this level. We didn't get a close below that level. Punched up to that next level, up that 488, got through that 488, 487.42, up to 480.60 again, stopped, came down, did not touch that 487.08. So then what did we get? We got a cross to the upside on this candle right here. So at 10:19. So at 10:20, I thought, you know what? Let's go ahead and put on this trade. Let's see if we can jump it, realizing that I was below that 487.60. So even being below that 487.60, where's my risk? So I'm looking at my risk. Okay, I've got 51 right at this level. If I breach that back to the downside, this is my safety. So this is my level of risk right here. 487.42 back to the downside. What do we have? We got 11 or 12 cents worth of risk. That's nothing. So back to the upside, I knew that if we could breach 487.60 and again VWAP, if we could get above those levels, we'd have a chance at 488.09 and then 488.63. So what did she do? This is what she did, folks. She ran and ran and ran and ran. Now, as a 920 trader, what we are trying to do is we have levels that we're looking for, folks. We have specific targets that we're looking at throughout the day. And we should. It's only wise to do that. Okay, so we should have those targets throughout the day. But we're using this 9 as support to help us get to our targets, okay? Think of this kind of as stair steps. So we have stair steps up on the way to our target. Once we get to our target, whatever happens after that, happens after that. Okay, now, here's the thing when we are dealing with targets. If we move easily through a target, so we move easily through the target on that first candle, second candle, somewhere right around in there, go ahead and ride it up. And again, use that 9 as your support on the way up. If you struggle to get to that target, take the trade off the table at that target, okay? Take the trade off the table at that target. So we hit this pre-market high. At that point, I said, you know what? We got a nice little candle that punched us up above that pre-market high. So you know what that was? That was another all-time high, folks. That's what we're looking at, another all-time high. At that point, folks, at that point right there, we don't know where we're going. We have no historical perspective. We can't look left and see, well, where's our next level up? We don't know where that next level up, folks, is. We have no earthly idea. Again, we have no historical context. Think back to last Friday when we got through the all-time high, and then it just kept running for another $3, $4, somewhere right around in there. But it just kind of bounced around, just trying to find its way up. Again, we didn't have anything. We couldn't look left. We didn't know where it was going to go. So I did punch out after we hit this target up here, marketed out of that order right there. So again, very, very nice play to the upside. I didn't take this play back to the downside. We were able to breach this level that we were looking at. Again, that's that pre-market high. We tested the pre-market high a couple of different times. So on this second test of the pre-market high, guess what? I jumped in on this. We breached not quite a double cross, but we got below the 20. So we opened below the 9, closed above that 20. Closed below the 20 and put on the trade right here with VWAP being, actually my target was 488.09. So 488.09. We tested the VWAP a couple of times, couldn't make a play as far as pushing it any lower. So anyway, a good trade right in here, had a really, really nice strong cross to the downside. Now, didn't play this back to the upside. And missed this one back to the downside too. And it's probably a good thing. I would have tried to get at least a VWAP. We didn't get to VWAP, rejected. And so that I didn't take that trade, took this trade, missed this one back to the upside. Now, here is the trade as traders, as stock traders or as options, even as futures traders, folks. We are looking for setups just like this. So again, this was our pre-market high. We took out the pre-market high. We're thinking, okay, are we going to continue running up? Are we going to push down? Nobody knows. Nobody knows. But I say this all the time, folks. When your edge presents itself, put on the trade. So we put on the trade because, quite frankly, we don't know what's going to happen once we put on the trade. Once we put on the trade, a couple of things. It's either going to go for us or it's going to go against us. But if your edge is there, put on the trade, folks. Guess what? Our edge was here. Our edge was here. Look at this play to the downside. Absolute beautiful, beautiful, beautiful trade to the downside. This is almost a $2 move. So again, let me explain as a 920 trader what we are looking for. Number one, had a beautiful down cross on this play right here through that level of support. So this is my risk. My risk, again, is what? It's, 8 cents, 7 cents. If we breach that back to the upside, guess what? I'm getting out of that trade without a whole lot of damage. I mean, there's very, very minimal damage on 7 cents. There's really just nothing there. So double cross to the downside with my risk right here at this 488.63. Again, we're using this 9. We're shooting for targets, folks. First target, we got that first target. Took a few minutes to get there. Now, because we were able to get below and close below the VWAP at that point, we stay in that trade. So here's why we stay in that trade, because we got the breach below VWAP. So that breach below VWAP, our next target down is going to be that 488.09. So 488.09 got there relatively easily. We closed below that target again. Now, our next target, we're looking for our next target down using this 9 as our resistance. Again, the 9 is our guidepost. It's our stair steps back to the downside. So we had this 488.09 followed by the next line down. Remember that line from earlier, 487.60. So 487.60. Again, we got down to that level, so we punched it back to the downside. Next level down was just below it, 487.42. Now, I told you I'd go back to this level right here. If we went to the 5-minute chart, so let's go to that 5-minute chart real quick. And let's get there. All of this support right here on this 5-minute, again, 5-minute intraday early support, all of this. So we still have those buyers sitting down there. So we needed to get through those buyers and, close them out of their positions, make buyers, sellers at this level. So again, there is that level. So that's 1, 2, 3, that's 7, almost 7 touches. So 35 minutes at that level right there. Again, that's a 5-minute. Back to the 1 minute. So at that level, I'm thinking, okay, well, we're bouncing around. Let's give this a little bit of room to breathe. We know that our next target down here low is that 487.08 because, again, that's that strong 30-minute support from the last 2 days. So at that point, we're thinking, okay, we've got this 9 as resistance. As long as we don't breach this 487.60 back to the upside, we can stay in this trade. So let's hope that we can recapture the 9 back to the downside, take out this 487.08 and see where it can go. Now, we were able to do that. It struggled a little bit. But absolutely. Now, when we can breach and hold below a line, we're looking for our next target down. Guess what? We didn't get that next target down. We're looking for that 486.55. It didn't happen. So, you know what? We give it a few minutes and then we eventually close out of the trade. Again, a beautiful, beautiful, beautiful trade to the downside. Now, as traders, one of the things that we hate the most, particularly as options traders, is we put on a trade, we make money on the trade, we close the trade, and then the trade continues going in our favor. So we have to have a specific reason or a system for getting out of trades. What is your system for getting out of your trades? What is the reason you're getting out of trades? And again, the last thing we want is to be in that winning trade, take it off the table, and have it go in our direction. It happens. It happens to everybody. Why did I close that trade? Well, generally speaking, you close that trade because you were fearful in the trade. The two emotions that will destroy you as a trader are hope and fear. So hope kills you when you're in a losing trade and you hope that it comes back to pick you up. Oh, I hope. So again, predefine that risk. If it hits that level of risk, get out of the trade. You can always get back in. In order to grow your capital, you must first protect it. So that's one of the ways that destroys you as a trader. I hope that it comes back to pick me up. And, if it does, that's an error on your part. That's a big time trading error. Again, predefine your risk. The second thing that will destroy you as a trader is fear. You get into that winning position. It's going in your direction. You're watching your P&L and you're going, I got to get out of this trade. I got to get out because I've made money. But the chart might not be giving you a reason to get out of that trade, folks. Make sure the chart gives you a reason to get out of every single trade that you put on. You have to have a reason. We are using technical analysis to get us into the trade. So let's use technical analysis to get us back out of that trade. Let's not take arbitrary positions. Either way, don't take an arbitrary position to get in and don't have an arbitrary reason for getting out of the trade. Your emotions, that is an arbitrary reason. But again, nice push down back to the downside. We just kind of bounced around, didn't take anything to the upside, waiting for a pullback. Guess what? Here's that level again. There's that 5-minute intraday level. Again, strikes again. Now, If we were able to get through this other low, this low that we had a hard time getting through, I had, again, that target of 486.55 back to the downside. Guess what? Almost to the penny. So I got in here, and this was my target, folks. Bounced around, finally got it, got out of the trade, called it good for that one. Now, I missed these moves. I missed this big move to the upside. This was an absolute perfect setup off of. Now, after we've made a low, you can take that first run up, but it's always best, generally speaking, to wait for that second run up. So you have a run up, you have a pullback, so you're making a higher low. In other words, a higher low at a known level. So again, 487.08, a known level. Look at this. Strong 30-minute zone from the last 2 days. So strong level. Now, yesterday, midday, we rejected off this zone back to the downside. Later in the day, we pushed it back up. So again, a very, very strong zone both to the upside and to the downside. Again, I missed this trade. I mean, it was a beautiful, beautiful trade for the people that were in it. Again, you move up from the low, make a higher low, and then take it back up to the upside. It ran through VWAP. It got up to, again, that 488.09, rejected off that, tested it multiple times. So what did I do? I thought, you know what? Let's take this back to the downside, put on a trade right here. Good entry. We breached. We had a 920 crossover to the downside. We had a breach of these latest two candles, but you know what? I wasn't watching this 70-71 area right in here. And it reversed on me. I took the L on that play right there. But again, should have waited for another pullback, but my edge was there. My edge says go ahead and put on the trade right here. What do you have to lose? Not a whole lot, because you've got this area right here. If you breach this back to the upside, and I give it a little bit more room. I give it these candles up in here. If you breach that, in other words, if the play goes against you at that level, get out. Again, predefine your risk before you ever put on the play. Now, right in here was another breach of the VWAP back to the downside. And I thought, you know what? I've got VWAP up here. If we breach it to the other way, so in other words, if this candle goes against me pretty quickly, I'm going to get out of the trade. So I took this trade right in here. Again, late in the day, we had about 40 minutes to go. In the trading day, I took this to the downside. We had targets that we were looking at. Our first target down, again, was right in here, folks. That 487.42, 487.42. We got through that 60 relatively easily, but I was looking for, again, this level down here. We got down to this level, to that 487.42, bounced back up, and I said, you know what? I'm still okay on this trade, a little bit on the negative on this trade, not a big deal. I was using that 20 and kind of this point of no return, or this point of basically the VWAP up here. If we breach VWAP, I'm taking myself out of the trade. But I thought, you know what? We've got some momentum to the downside. Let's stay in this trade. Again, if we breach that 20 to the upside, that's probably going to take me out of the trade. We tried to test the 20. We recaptured the 9, came back down. We got through this level right here, 487.42. And again, the POC, there's your POC sitting at 487.35. Now, during this time frame, the POC was 2 cents up above, so 487.37. So it just kind of bounced around. And again, the POC, that's the point of control, the point at which most money has changed hands during the trading day. Once we got back below that area, I thought, you know what? Let's go get that target down there. Let's get that 487.08. Now, if we were able to breach and hold below this level, 487.88, I was thinking 486.55 may have been in play. But we didn't. Again, we were struggling. We took this candle. Again, I marketed out on this candle right here. Again, as 920 traders, we need to have targets, but we're using this 9. Again, this 9 is our resistance going back to the downside. It's our support going to the upside. We also use this 20. So this 20 is going to be kind of that point of no return. You breach that back to the upside, seriously consider taking yourself out of the trade. But anyway, that's kind of how it played out today. I mean, it was beautiful. It's a wonderful day. The folks in the community did very, very well today. Again, have your targets in mind, and then use that 9 as your resistance on the way down. Use it as your support on the way up. Okay, so that's a strategy. That is the 920 strategy. Again, have your targets. Have your targets, folks. Now, if you enjoy our videos, please give us a like, consider subscribing, comment, and share with your friends. We would greatly appreciate that. If you're interested in live daily trading, so every single day that the market is open, every single day, there's a link down below for our Discord server. It is Trading Decoded. It is live interactive trading every single day. So from bell to bell. Now, also as an added benefit to our members, you get a one-on-one. You get a 30-minute one-on-one at no additional cost to you as a member of our Discord community. So come on over. We're going to give you that first week for free. Absolutely. No cost. If you like it, great. And if you don't, hey, we understand that too. Might not be for you. But anyway, thanks for spending a little bit of time with us. I hope everybody had a great trading week. But above all else, I hope you followed your trading plan, not just today, but this entire week. Now, one other thing I might add, go back and look at the chart today. In looking at the chart today, and look at yesterday also, what I want you to do is I want you to look at every single time that your edge presented itself. So look every single time your edge presented itself, and then reconcile that with the trades that you actually took today. And then look at yesterday's chart and Wednesday's chart to see how close you can get from the actual trades you took to the times that your edge presented itself. And in the comments, let me know how you guys did or how you are doing. But again, thanks for spending your time with us. This is how we traded SPY today. I hope everybody has a great weekend, and we will see you in the markets.